now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today we are joined again with Justin Huhn of the Uranium Insider. What's going on?
Happy New Year, Daryl. There's a lot going on. Good to talk to you again. How are you?
I'm doing well, doing well. Just coming over, getting over my hurdles from the end of last year, but this year is starting to look bright, and so I'm excited to engage and just keep moving forward.
I hear you. Yeah. It was a exciting end of the year. It seems like everybody that I've spoken to, yourself included, had a pretty eventful, November, December, even aside the markets on personal levels. So it just seemed like a whirlwind year with the elections leading into market volatility and everything else that went on to end the year. But on the nuclear side of things, it was a very foundational year. A lot of positive fundamental elements that came into play, and I think that's just going to continue on and potentially for a very, very long time. This electricity demand that's happening right now, especially in the United States, is huge, and it's de-risking the fleet. And we can get into all these elements if you want to, but for me, 2024 laid the foundation for what's going to come this year and likely in the coming years. And still, we've got a little bit of overhanging uncertainty, probably until we figure out exactly what Trump and his new admin are going to do relative to what the incredibly bullish Biden admin had done for nuclear energy in the United States. So still biding our time a little bit here, but I think that's coming to an end very quickly.
Yeah, definitely. So when you mentioned foundational, what are some of the pillars that you think were solidified in uranium and nuclear last year? I know in 2023 we had some like the Advance Act and a few different acts passed, and last year we had some of the bigger tech companies start investing and such. But in your view, what were some of those foundational components of nuclear that were set in 2024?
Sure. Well, the Advance Act actually was signed into law last year. The year before was the Inflation Reduction Act. That was the big piece with a lot of subsidies for clean energy. That's one of the big overhanging uncertainties is what is Trump going to do with the Inflation Reduction Act? And I think it's pretty obvious he's probably going to want to cut subsidies for renewables, whether or not the funding, the clean energy production and investment tax credits that are hugely benefiting nuclear are going to be cut as well is a big question for the industry. It's hard to predict. My understanding is that most of the states that are benefiting from the IRA's nuclear specific financial support are Republican-led states. So it's largely his constituency, for lack of a better word, and probably less likely for that funding to go away. But who knows? The IRA could be completely demolished. It could be chopped up. Parts of it could be kept. Parts of it could be ditched. We don't know. So that's a big overhanging uncertainty for sure. As far as the foundation that was laid in 2024, a lot of that had to do with the understanding of the growth rate of data centers and AI and the electricity demand that that's placing on the grid. So that's pretty much a foregone conclusion at this point, recognizing this incredible, incredible rate of growth and how much electricity that AI and data centers will be consuming going forward. And this is not universal in every single country, but in many developed countries, this is the case. And so that's especially the case in China, in the United States, in the UK, in Japan, even in Germany, that has a decent number of data centers. And whether or not they will turn their reactors on, if they have new political leadership, hard to say. Not holding my breath, but not giving up either.
Really quick,
So
really quick. So
yeah,
with AI data centers, so you mentioned the rate of growth. So there's talk about natural gas as well as uranium with the AI data centers. And so, do you have a view on like, okay, is it going to be more nuclear, more natural gas? I'm hearing kind of like both of these being brought up in terms of data centers and how they're going to be powered.
it's going to be both. And so on the nuclear side of things, what I see playing out, let's just say for the next 5 years, is in the United States, we'll see life extensions basically across the board. So any reactors that are slated to shut down in the next 10 years, um, all of those have already submitted applications to the NRC for life extensions. And you'll hear about life extensions being granted every month or two in the United States. And we only have 93 reactors, right? So the fact that these are getting extended almost on a monthly basis is very, very bullish. So the existing nuclear reactors in the States will largely, if not entirely, be life extended out to 60 and probably 80 years, possibly even out to 100 years. So this electricity demand growth is de-risking the existing fleet. Now we're hearing a lot about, the intention to build SMRs. There's dozens of locations of existing reactors in the United States that are already licensed to build additional new units, additional reactors. Whether or not that is going to happen in the US still remains to be seen. We believe we're going to see announcements this year of new large reactor construction projects. In my opinion, the only thing holding that back right now is uncertainties around what Trump is going to do. We think Trump is going to be enormously bullish for nuclear, domestic nuclear. We know he wants to be number one in pretty much everything, just because that's how he rolls. But he's super pro America. They want to lead in energy. I think a lot of the stuff around Canada and Greenland has to do with controlling shipping routes in the Arctic. I think that there's going to be a big push towards America first, towards leading and eventually, hopefully, winning this quote unquote AI race with China, because it's absolutely game on right now. He knows it. Elon knows it. Other people within his supposed or proposed cabinet know it. And it's going to have to be all hands on deck and all sources of energy. China on the nuclear side is actually able to build new nuclear, and they're doing it like crazy, right? So they've got 29 reactors under construction right now. Between 8 and 10 are being new construction projects are being launched every single year, with the same number of those hitting the grid every year. They're growing really, really quickly. So China is the big growth story for new nuclear. There's 15 countries building nuclear, but China is far and away the largest in terms of capacity that they're building out. So de-risking of the existing fleet in the US, new nuclear in China. That's the big part of this AI data center story. As far as natural gas goes, natural gas, especially in the United States, is going to have to fill that gap. So until and unless we build significantly more large nuclear reactors, and I believe that we will, but that is going to take time. It's going to take a enormous effort for the United States to get its act together on that front. So in the meantime, a de-risking of the fleet, and I'm very bullish natural gas. I think that there's a lot of opportunity. Now there's an absolute glut of this stuff right now, but I think that the demand is really, really going to increase in a major way. Very intelligent macro analysts such as Gehring and Rosenzweig, they're very bullish natural gas. They believe that eventually we'll see parity in price between the US and Europe, which would be a huge move in US natural gas prices. But Trump also is probably going to be drill baby drill, trying to keep the prices down. But either way, natural gas is going to be a major beneficiary of meeting those electricity demands in the near term for sure.
Got it. Got it. So with production, last year Kazatomprom said that their numbers weren't going to hit their projected targets or something of that nature. Is that one of the foundational components that you're looking at as well from last year? I mean, because the supply deficit of uranium continues to it's still not being equalized or whatnot.
Yeah, and it won't for many years and possibly ever, depending on how smoothly and quickly some of these new large projects come online. Kazakhstan's production not being able to ramp as they have projected in years past is really just the biggest and most obvious example of mining is hard. This is the largest producer in the world. They have enormous resources. The ISR production is incredibly consistent, but it does take consistent drilling out of new wells. It takes more and more sulfuric acid. So the more acid is needed, not only to expand production on a 100% basis, but also as deposits, they've gone after the best deposits. They high grade just like anybody does in any type of mineral, any type of commodity, right? You go after the best part of the best deposits to start with. That's just what you do in mining, period. So as the projects progress, as new projects come online, they are almost inherently not as shallow or high grade as the previous projects, right? So more acid is needed per pound of production. More acid is needed to increase production. They're in early stages of building another sulfuric acid plant. We believe it's going to be at least 2 and possibly 3 or 4 years until that plant is producing acid. In the meantime, it's problematic to import it. The Uzbeks don't want to export it anymore. They want to keep it for themselves. Getting more acid affordably from Russia has been a big problem in the last couple of years, especially. So we think that their projected production for 2024, when it gets reported next month, is going to be at the low end of the range, possibly even missing that low part of the range. Their numbers for 2025, I still believe we're not going to be able to hit that. So, and we're going to have to look at their financials for the second half of last year and to see how much they have increased well field development and sulfuric acid purchases. Those, it's really, one has to equal the other. So you're not going to see increased production unless you see massive increase in capex, both in well field production, well field development, and sulfuric acid procurement. If we see both of those that are greater than the increase in costs overall, we can expect their production to grow a little bit. That's just what we have to continue to look at. So they will be able to increase a little bit, in my estimation, 2025. How much is hard to say. We'll see what they tell the market next month. There's problems with Cameco's Inkai deposit. A couple of very interesting things. Knowing exactly what's going on there is almost always nearly impossible. It's kind of a black box. But we saw their reporting for the first half of last year that Inkai was their production was down 20% year over year for the first half of the year, which was quite the head scratcher. There was one other project, also I think it was a French JV, if I recall correctly, that was down a little bit on the year. The other projects, the Russian and Chinese joint ventures, were either flat or up. So it seemed to us that priority for acid is going to their Eastern partners. Could be wrong in that front, but that's what that's the story that the numbers seem to be telling. And then just 2 weeks ago, we heard that Inkai project was being halted temporarily because Cameco had neglected to submit some paperwork related to the production permits. This is very strange to us. Cameco has been their partner since I think it was 1996 with this project. Didn't start producing until I think the early 2000s. This is the biggest and the best ISR project in the world, period, bar none. We're talking about 8+ million pounds a year of production consistently, year over year over year over year. And it's supposed to continue that rate of production for another 20 years. This is an enormous and incredible deposit. The fact that it was halted over some quote unquote paperwork stinks. It smells bad to me. Their production miss last year was problematic and strange. There's also some other elements. Cameco doesn't want to put Russian sulfuric acid into this deposit. They also don't want to receive deliveries from St. Petersburg. So they've chosen this western route that goes through the Caspian. And that's been expensive and slow. So the whole thing is a little bit of a mess. The really high level soundbite takeaway is that production out of Kazakhstan is going to be increasingly prioritized for their Eastern joint ventures. And aside from the joint ventures, the 100% owned projects by Kazatomprom, more and more of that production is being sold to China. So this Central Asian country, obviously sending material north and east to their neighbors, 100% easier than shipping it west, either through the port of St. Petersburg, which certain Western partners don't want to receive material from there, or Western through the Caspian. It's much more expensive and slower. There's conflicts in some of the countries that route needs to cross. Mining is hard, even in Kazakhstan, where it's been unbelievably predictable, consistent, and abundant. And so our base case is production out of Kazakhstan will continue to grow slowly, probably for the next 5 to 6, maybe 7 years. At that point, most of their projects that are existing, that are producing right now, start to decline, and they start to decline fast in the early 2030s. So they're going to need an absolutely enormous amount of capital investment, sulfuric acid production and procurement in order to maintain, let alone increase production in the 2030s.
Got it, got it. So with Chemical, back to Chemical, with the recent resigning of Trudeau and such, do you see this kind of period of time for? I know energy companies in general, like oil companies, I think they had a hard time under Trudeau. I'm not sure if that was the case for Chemical or if any risk are there for under a new administration or whatnot.
Yeah, I think it adds to certain uncertainties, I'm sure, for nuclear operators, other types of energy operators. I don't know necessarily if it's a foregone conclusion that Polyev will end up as Prime Minister of Canada. I think that would be enormously bullish for Canada. I would love to see a Canadian resurgence, just in general, kind of trade markets, capitalist markets, to see energy being supported and to see some rebound in the Canadian dollar in the TSX and TSXV would be very, very welcome and very bullish longer term for mining stocks in general. So, but of course, political upheaval always adds uncertainty. Uncertainty tends to lead to inaction amongst in the nuclear sector, not only for builds and things like that, but especially for the nuclear operators. Uncertainty just causes them to sort of pause. If they're going to be procuring, they'll be procuring towards the end of the fuel cycle. And once those uncertainties clear, we think the utilities can come back to the table in a pretty big way into the term contracting market for sure.
Okay, okay. Thanks for sharing that. With enrichment, what is the state of enrichment? I know that there was the Russian uranium ban, and then now we have a new administration coming in, and Trump wants to strike a peace deal between Russia and Ukraine, and I know majority of the enriched uranium comes out of Russia, and I mean stocks like Centrus Energy saw like a huge. I sold it too early, but yeah, went from $39 to $100, and I mean now it's come back down. But yeah, I'm kind of wondering what are you thinking about with enriched uranium?
So Russia doesn't have the majority of enrichment, but they are the biggest player, right? So they have somewhere around 40% of the world's enrichment capacity. The ban that the U.S. enacted that went into law in August had waivers, right? Waivers available from the Department of Energy. And what we heard from the initial months following this becoming law in August is that waivers are granted at least twice and possibly 3 times. And they were granted to the first waivers were granted to Centrus, basically as a broker for multiple US based utilities to receive that material. They did receive that material through that waiver. Second waiver, I believe, was granted to Constellation, which is the largest nuclear operator in the United States. Then in November, we actually had Russia place an embargo on the exporting of enriched uranium to the United States. Now, technically, this had almost like a similar structure that 10X, which is the Russian Enrichment Corporation, state owned, would have to request waivers from the Russian entity, the DOE equivalent in Russia. I don't remember what they're called, on behalf of their US based customers in order to receive a waiver and be able to send the material. What we know now is that the 3 shipments that of enriched uranium headed to the United States from Russia that should have happened since this went in place back in November did not receive clearance to do so. So 3 shipments of LEU from Russia that was meant for the United States did not happen. And that has been the case from early December until now. It is looking like this embargo is going to remain intact. Whether or not this ends up on the negotiating table with some sort of effort to end the war with Trump, who knows? Who knows? That's a big question mark. But as of now, since that embargo went into place on behalf of Russia, zero Russian uranium has been shipped to the United States. And the holidays leading in, so the holidays, everybody leaves the desk, right? And that's why we saw the price plunge. A couple of sellers putting low volumes of material into the spot market, and everybody's at home celebrating Christmas and New Year's, and they're with family. They're not buying uranium. So the price dropped, what, $5-6 in the month of December. It was a decent sized drop on very little volume because everybody was off. So holidays leading into January, inauguration of Trump and this new admin, this is a big overhang where we have a major disruption. The US isn't the only market in the world, but they still are the biggest market. Not for long. It's going to be China in a couple of years, but as of now, it continues to be the United States. There's also complexities such as Japanese utility or a Mexican utility, which is actual example of what happened in this previous delivery. They were expecting the delivery of LEU into the United States to be fabricated into fuel in the United States and shipped to Mexico, and that didn't happen because of this embargo. So it's causing all kinds of problems in the fuel cycle, not just for the US. So while the US is 25% of the global market, it's affecting probably 35% of the global market. That's huge. Now, this material that should have gone to the United States can and will be sold elsewhere. It's not like that material is just vaporized. It will be sold elsewhere. But when the United States has to cover this enrichment and buy enrichment elsewhere, they have to provide the feedstock up front and guarantee there's going to be higher tails assays, which means more uranium feedstock for the same amount of LEU that they should have received from Russia. So it's a problem, and it's a major problem if it continues. As of now, it is looking like it's the real deal, that this material is in fact cut off. How long will this embargo remain in place? Russia, as it is now, it will remain in place until the end of 2025, unless and until it is extended or something happens between now and then, potentially with negotiations. I don't really know, but that is a very big question mark for the industry. Is Trump going to end the war? Will we again regain access to Russia's material? We don't know. Doesn't seem likely that that is going to happen, and if so, not going to happen quickly. So we saw the price of enrichment skyrocket last year, and that was largely due to Western utilities buying up enrichment from Western sources. And they were doing so because that's the closest element to the end of the fuel cycle to make sure that they have their fuel covered. We also saw a lot of conversion bought up. Spot conversion is at all-time record high. Term conversion is at record high. And so all of those conversion contracts need uranium feedstock to go into them. Some of that still needs to be covered off. So a lot of uranium needs to be purchased this year and next year to feed into these contracts in the coming years.
Got it. Yep. So with Russia, I mean, there's to talk about a peace deal. I mean, that could be. I don't know if I'll get access to my Russian stocks again or what, but but I lost my shirt on that one. But so thinking about a peace deal that would seem to be like more bearish for certain energy sources, whether that be natural gas or oil, because Russia does produce a lot of energy. However, with uranium, like there's even before the Ukraine and Russian war, there was a supply demand gap, like a big gap between there, and there was a deficit, and that deficit is still there. And so, do you see if a peace deal gets struck with with Russia and Ukraine, that impacting the price of uranium or no?
It's probably unlikely that it'll impact the price of uranium. I think the biggest impact would probably just be to the equities, because there is a concern that that would be a bearish thing and the equities might respond to that in that manner. However, the legislation that is banning Russian uranium in the United States is law. So that's not an executive order that went through the legislative process. So in order for that to be reversed, let's say theoretically by Trump, which I don't know why he would want to do that. I think that there's this assumption by some people that Trump is super friendly to Russia and is just going to open everything back up. I think that would look really, really bad. Have to keep in mind that the Russian ban was voted unanimously and bipartisan by Republicans and Democrats. So, in order for the ban that is law right now in the United States, even though they have granted waivers, there's no waivers starting January 1, 2028, which is tomorrow in the nuclear sector. So, but even if they wanted to reverse that, it would have to be done through the legislative process. They would have to introduce a bill and have to pass the House and Senate and get signed by President Trump, which would, in my opinion, look really, really bad. Because just because a peace deal is granted doesn't mean all of a sudden the Western world is going to be forgiving of Russia's actions, right? So I think it's going to remain complex and problematic. With that said, if there's peace, which hopefully there will be between Russia and Ukraine, and I mean basically between Russia and the United States, it's a proxy war essentially. That um, that would be a good thing for the world to see a war end. And if the equities react negatively to that, I think that's just one of those things that's presumptive without really understanding the dynamics. Even if all of a sudden the market was opened back up between the United States and Russia, there's still a Russian suspension agreement that limits the amount of enriched uranium that the U.S. customers can buy from Russia to what 25-26%. So that's still in play. So, and like you mentioned, Daryl, there's still a deficit of supply globally that isn't going to be fixed by this bifurcation ending, and which we don't see ending anyways. Even if the war ends, we don't see this going back to how things were in 2019 like that. I think it's going to be problematic for a while still.
Okay. Okay. Thank you for sharing that. And you mentioned the equities, how the equities could respond. I wanted to get your take on the equities just in general. I mean, if we were to see a um, uh, more of a correction, which we did see some of it. I know Cameco, I gave back some gains on Cameco and such, since I bought back in September or August, September. So would you be looking at more of the small, large, mid caps of the equities? For me, like I personally, I just read this article that was. It was an interview with Warren Buffett, and he was talking about just when he buys a company, he has a 5 year outlook, and his advice was don't touch it. There's going to be a lot of volatility, and within those 5 years, don't even look at it. Don't even touch it. Don't. Even, I mean, I'm sure he looks at it, but it was just kind of got in my head of like, okay, I need to be in this more for the longer term for, my thesis to play out and stuff. And so obviously sometimes people get shooken out by uh, the the intermediate price moves upward or downward. But for me, I'm really looking at like more of a longer term view. And so, what's your take on the equities as we close out? And just wanted to get your take.
Sure. Well, I think last year we saw some pretty big moves in the nuclear stock. So some of the SMR builders, the utilities, and even to start this year, some big moves in the utilities. This I think is going to be the year for the uranium mining stocks. And honestly, probably anything across the board is going to move. The big caps, of course, tend to move first, and they have outperformed the small and mid caps in the last couple of years. Will that continue to be the case? Possibly to start the move, but if we see a really sustained move this year in conjunction with the rising uranium price, which I believe is coming, then I think we're going to see the mid caps and the small caps start to play some catch up and possibly even outperform. So the main thing I would be looking for is buying a basket of equities, if not just the ETFs, if you don't want to do the research on individual companies, then you want to buy what is held by the ETFs largely. Now, there are some Explore codes that are smaller cap that I think are doing the best that they can in a capital constrained environment that is inherent to these Explore codes that don't get the benefit of the ETF flows. It's a very, very tough game that they play. Maybe you can strike gold by buying one of these 10, 20, $30 million Explorcos and they hit pay dirt during the bull market. That's possible. But I wouldn't put all your eggs in that basket. You want to be able to benefit from the ETF flows, because that's really, flows move everything. There's not very much in this particular market that, or in any market right now, that is moving off of a compelling valuation, right? So you look at, I mean, the market, generally speaking, the broad market, we're at historic valuations, historic PEs. So to look at the uranium sector in particular, it's very, very similar. It moves off of flows. And when the flows come into the big caps and ETFs into spot, it just moves everything. So the developers, the mid-cap developers, I think are a good mid-range play. Companies that will be producing something this cycle are the types of companies that we like. Usually they're large enough to have decent liquidity if you have liquidity constraints. But yeah, I think this is going to be the year for the miners. So what we've seen with the price of uranium is we've seen the term price continue to rise higher on low volumes traded, and the spot price has fallen on low volumes traded. So the spot price settling out at $70 is lower than we thought it would settle out because of where the term price is at. But the utility interest is just not there because of these uncertainties that are overhanging the market. When these uncertainties leave, uranium procurement is going to increase again on behalf of utilities, and we're going to see large moves in the price. So I don't know if you saw this, Daryl, but last month Morgan Stanley put out some research, and they like uranium. It's their favorite commodity for 2025. Now, they also predicted that the second half of last year for uranium was going to be negative. They were negative on uranium for the second half of last year. That was a very good prediction on their part. We saw some decent moves in Q3 for the equities, but really the price of the spot uranium didn't really move. Term kept rising, but all of the signals in the fuel cycle are pointing to higher uranium prices. Skyrocketing conversion and enrichment means that uranium will play catch up. It has to. It isn't theoretical. You buy conversion contracts, you fill them with uranium feedstock. If you don't have that uranium feedstock, you have to buy it. And the fact that the price has remained relatively stable in a low volume environment leads me to believe that when volume returns, price will respond. And that's what we think is going to happen this year. And uranium equities should see an enormous rebound, considering how poorly they've traded for most of last year, and especially the last couple of months. It's been pretty brutal.
All right, cool. Well, you all heard it. Justin's outlook on this year, as well as Morgan Stanley's outlook. Thank you for pointing that out, because I have not seen that, so I'm gonna have to be sure to go back and check that out. All right, Justin, where can people find more about you and the information and the research that you're doing?
UraniumInsider.com. If you've never been to our site, if you show up there, you can download a free white paper where we go over just kind of the general thesis for being long this sector. And I just want to point out, the big event that we're all waiting for, which is considerably higher term contract volume being done. That hasn't happened yet. And this is the thing that uranium investors that have done very, very well over the last 4, 5, 6 years, myself included, the event, replacement rate contracting, has not happened. And that is what is going to happen in the coming years. So we've seen a lot of positive movement. We've seen a lot of price movement. We've seen historic price movement across the fuel cycle. We've seen fluctuations, the equities, big up moves, big down moves, very volatile, long consolidation period. We think that's coming to an end relatively soon, and we got the next leg higher for 2025 in the uranium miners.
All right, sounds good. That sounds like music to my ears. Well, you all be sure to go check out uraniuminsider.com. Justin, appreciate you coming back on. Gotta have you back on sometime this year to give us an update.
I look forward to it, Daryl, and Happy New Year again.